Hello and welcome to a new episode of the Data Front Porch podcast. We have a lot of exciting news today. We're going to talk and walk you through the Zillow Opendoor partnership. It just launched today. We're going to walk you through the flow. We're going to comment what we think, how we think this thing will work. We're going to talk about mortgage rates spiking and what that might mean for demand in the next few weeks. We're also going to talk about marketing news from Opendoor. Opendoor is ramping up their marketing nationwide and had some really cool campaigns, as well as our expectations for earnings next week. Yeah, that's it. Let's get started, Tyler. We heard today that Zillow finally is rolling out the Opendoor partnership in Atlanta and Raleigh. Tell us more about that.
Yeah, so Zillow announced earnings today after the close, and basically what they revealed is that the long-awaited Opendoor Zillow partnership is now live. We haven't gotten too many details about it, and unfortunately, no analysts asked any follow-up questions during the conference call. But what we do know is that Zillow launched the partnership with Opendoor in two big markets, so markets Atlanta and Raleigh. Which are Opendoor's number 2 and number 15 largest markets by volume as of right now. And so the exciting thing about this is not only did we get this announcement, but we also got sort of the user experience, so the customer experience when they enter into Zillow's funnel and end up moving over to Opendoor's website. And I think it's important to think about it this way. Zillow is trying to gain more seller solutions, right? And so when a homeowner comes to Zillow to sell their home, Zillow doesn't currently have a lot of options because guess what? They exited iBuying in 2021. But by partnering with Opendoor, when homeowners come to Zillow to sell their home, now Zillow can give them a variety of options, including getting a cash offer from Opendoor today. And so that partnership is really exciting because, as you can imagine, it really broadens Opendoor's funnel for prospective clients and acquisitions. And we've been really waiting on that because we continue to believe that Opendoor ramping acquisitions or home acquisitions is the most important part of their thesis as we move farther into 2023.
Yeah, before we jump into how the experience looks like, we have a recording of the experience and can work through it step by step. You're already drinking early today. That's great. Or I guess it's late for you.
I'm there.
I just wanted to double click on the two markets, Atlanta and Raleigh. What we see is from Opendoor's perspectives, they have a very different margin profile right now in their inventory in those two markets. I think Atlanta is super healthy, while Raleigh is, it's not terrible, but it's on the lower end of the margin spectrum. They're like barely profitable on the embedded margin on their listing margins right now. We don't know how many customers will go for this flow. We don't know how much Opendoor will increase purchases for this, but it's quite interesting that they took two markets. They didn't take their two strongest markets and margins. They just took two very different markets, right?
Yeah. I think that brings up 2 points. One is we can see an immediate boost in margins for Opendoor just because of the sheer volume that Atlanta has as a baseline, right? So Opendoor's operational capacity in Atlanta is so much that they could probably absorb, a 3 to 4x volume in that market alone with the Zillow partnership and still operate well, right? And so that's really exciting because they sort of picked the market where they dominate, right? Atlanta is far and away Opendoor's best market. I don't necessarily mean always has the highest margin or always has the highest number of homes, but just across the board is their blue chip market, right? So always in the top 3 for volume, always in the top 3 for margin. They just crush it there. And so being able to broaden the funnel there means even more operational excellence in their core market, which is really exciting. But Raleigh is interesting because, like you said, they haven't been performing very well in Raleigh. It's probably a 25th percentile by margin market for them. And so what's exciting about that, for me at least, is you could really turn things around quickly with regard to listing margin or embedded margin in a place like Raleigh. If the Zillow faucet begins to turn on and you start getting all these new homes acquired at really good prices, because then those homes can be relisted, with pretty fat spread attached to it. And so that's exciting. But the other thing that's important to say before we dive into the UX is to remember that Zillow is highly incentivized for this project and partnership to go well. Um, Not just from a payment perspective, but from a we need Opendoor to do well for this deal to make sense perspective, right? So Zillow is being paid basically a referral fee to Opendoor when it sends homeowners to Opendoor's website through this integration. But also, there are performance milestones where Zillow is awarded warrants of Opendoor equity because of this relationship. And those warrants basically begin at $15 a share for Opendoor. I don't know if you've checked Opendoor's stock price recently, but it's like about $2 a share. So that's a ways to go, right? And so for this deal to make sense for Opendoor, for it to be a smart move by CEO Rich Barton, Opendoor has to both do well and Zillow has to both do well. But either way, it's a win-win for Opendoor because they're getting huge funnel whether or not the partnership, manifests or their stock price goes up. So I'm excited about it either way, but just being able to see that they finally turned it on was big news for today.
What I also love is the emphasis on this being a long-term partnership. So they might be collecting those warrants and this equity, and just to emphasize, the minimum price on that equity is $15. And I think at the time when this deal was announced and published, the stock price was already at like $6 or $5. I have a Twitter thread on this with the details. I will link it in the show notes. So if anybody wants to dive into that, and linking to SEC filings as well. But that means they already were pretty confident at the time when the stock price was depressed. Now they have to be even more confident. And I assume this was part of the negotiation, right? They're not just going to get cash. No, they believe that the company will be worth something. That's why they get equity. And they
Right.
announced it as like a 5-year deal or something. It's a long-term deal. They're not trying this out and giving up. They will together work on making sure this makes sense for both companies in the next 5 years. All right. Let's take a look at how the funnel actually looks like. We have a recording here of the user experience. I hope you can see that. Maybe starting at the beginning. If you're looking up your own home address on Zillow, you will see a box on the public page, but also if you added your address to your Zillow account, you will see this as well. A new box saying you can get a cash offer for this home. And there's an estimated market value attached to it, which is still the Zestimate. It's the Zillow estimate. It's not what Opendoor thinks the preliminary offer will be. It's what the expectation starts with this estimate, right? You can click on this button and you get immediately into a very similar experience that we have on the Opendoor page. You get a lot of questions about your home. What was quite interesting is on this page, you need to fill out a lot of information about your home, like how many bedrooms you have, when was the home built, and all this information is on the Zillow public page. So like, it's kind of weird that you have to enter this. And I think in actual Opendoor's flow on Opendoor's website, this is all pre-filled, the data that they have. So it's kind of maybe an additional hurdle on purpose or not. So you see me entering all this data that I copied over from Zillow's actual public page. And after you fill out all this data, which will take me a while here in the video,
Who knew about 3/4 bathrooms, by the way? Have you ever heard of that before?
no, I have no
I'm
idea what that
glad they
actually
asked
is.
that.
Important for the valuation, it seems.
I guess.
A lot of questions here. Uh, and I guess there's a lot of questions here that will disqualify you from that experience. We have to enter our name and our phone number here. Uh, Obviously, I just used a generic Atlanta address here. This is not my name and not my phone number. Please don't call me. Um, and we get a little bit of a disclosure of all the companies that Zillow is affiliated with. And after that, we see, we get to a screen that takes a little bit of time. I guess this is where Zillow talks to Opendoor's API and gets a preliminary offer based on the data that was input. And there it is. So we get to an offer page with two parts to it. One is sell with an agent, which shows Zillow's estimate. I think it was the same thing as in the beginning. Confirm. Actually, this one is higher than in the beginning. So maybe this is actually also coming from Opendoor. This is probably again a mixed result of what the most accurate number of what the home is worth right now. And the first option is selling with a partner agent. That means if you select this, your offer would go to probably a premier agent that is working with you to list the home. You can say you will schedule a call with an agent to refine your home value and create a selling plan. Then you decide to sell on a sale price and list your home. And then the next step, obviously we know how home buying works. You just select the winning offer. There's nothing in between. No like showings or anything. That's kind of weird here, but like you select the winning offer and then close and move and get paid. It's also quite honest about the benefits and things to consider with going with a traditional seller, which is quite interesting. And then we see the Opendoor offer, the preliminary offer. It is quite transparent about the, let me go back here. It is transparent about the fee, the 5% fee that you're paying to Opendoor, and the closing costs and your estimated cash proceed. It also has some details about how the process works, the digital walkthrough, and actually getting paid after that. Here it has the benefits. Get an all-cash offer within days, skip stagings and open houses, choose a closing date and move. They call out that this is a less hands-on, mostly digital experience, which is an interesting wording for this as well. And if you now decide to go with the Opendoor offer, you click on continue to Opendoor, where you have to enter your email address, and you get a link to Opendoor, and you get into the default Opendoor seller experience. You're landing on Opendoor's website. You're logged in there. What's interesting is the buyer services that Opendoor offers. Those are not available in this if you're going through this funnel. So the assumption here is whatever customers Opendoor acquires here, they are not allowed to upsell them on other services that Zillow might offer as well. It's only for selling services, likely also not for third parties seller experiences. Those are only rolled out in Texas right now, so we don't really know how it will behave. But it's very likely that Zillow won't send customers to Opendoor to then sell on their exclusive marketplace, right? Yeah.
Just want to dovetail off that point, because the absolute best version of this partnership is that Zillow sends leads to Opendoor, which then go to Opendoor's third-party marketplace. And Opendoor has an offer, but also has all these offers from institutions and prospective home buyers that, Opendoor links to those sellers. That is the best version of this partnership. A better scenario for Opendoor would just be if they can make that third-party marketplace sing by themselves. But I would say, let's say, we're 18 months from now and the third party marketplace is still only 5% of Opendoor's business. I think, if I were, in the war room trying to decide what next steps would be, I would really want to integrate the third party experience with Zillow, to try to make that happen. When I used to write about, Opendoor, big long essays about the strategy and kind of the opportunity, I said that it didn't really make sense for Opendoor and Zillow to team up, but that is the one place where the puzzle pieces fit perfectly, right? Is if all of these, these 200 million eyeballs that come to Zillow's website every month, all those sellers that are in that population, if those can be sent over to Opendoor's third party marketplace, that is the best real estate model in existence. It would be, and it would be a titan.
Yeah, I I I wonder what Zillow thinks about that. I guess it eats into Zillow's core business, which is showing MLS data, right? Uh, my assumption is all customers that are coming through this funnel will only get the first party experience, not even the buy with Opendoor experience. One thing we even saw in the press release is that these customers going to Opendoor might even use Zillow's closing services. So there might even be limitations in the long term of like how title and escrow can be attached to this from Opendoor's perspective. I think Zillow will make sure that this is beneficial to their users' experiences and not actually to Opendoor's users' experiences. So will be interesting how this evolves if there will be an expansion of services that are included from Opendoor's side. One interesting thing is when I went through this flow the first time, I actually got a text message from Zillow. So immediately there's a Zillow seller consultant that contacts you even if you haven't finished the flow. And I assume this is this is a Zillow employee that makes sure you're actually converting through this flow. Question is, what will this seller consultant recommend? There are two options. Will they recommend the Opendoor option or will they recommend the Premier Agent? I think from Zillow's perspective, if you're talking to a Zillow employee, it actually makes sense to recommend Opendoor's option. Because if you think about it, Zillow only gets paid if the seller actually converts. And there's a lot of drop-off points if they connect you to Zillow Premier Partner, right? You could drop off way at the end when you already had 15 showings and you just don't want to do this anymore and you put your home off market, or you could just never want to talk to the person you got connected to, where there's a lot less risk and the experience is a lot shorter if they send you to Opendoor. I think it's kind of a conversation what actually fits the seller, but it's really interesting that there's this hands-on sales experience. Like I even got immediately a call like an hour later from the Zillow seller and consultant. I didn't take the call. It would have been interesting to hear what they're trying to pitch, but
Yeah, you should have
it
taken
was
the call and messed with them a little bit and gone down the road and kind of been like, I'm really between these two options. What do you think about Opendoor? Just just to see what they're trained to say.
maybe we can do this for next episode. It was still 5 a.m. for me, so I was
Yeah.
like, I'm not want to talk to somebody from Zillow right now.
I bet 10 people in our Discord will do it by tomorrow.
Yeah, it would be interesting to see what they say. Yeah, pretty exciting news. I didn't expect it to be that ready already, or like to launch exactly on those earnings call days. So pretty happy with that. Hopefully, we get some more details around openness side of things next week. Hopefully, some of those analysts will actually ask questions about it to clarify. Um,
I think the one final point I want to make about that before we move on is I think the Zillow Opendoor partnership was announced prior to Opendoor announcing their plans for this third-party marketplace. And so, but that doesn't, I mean, obviously they've been thinking about this third-party marketplace for a long time. So that doesn't mean that behind closed doors, Opendoor and Zillow didn't come to an agreement regarding the third-party marketplace. But I would say the important thing to remember is that the economics of the third-party sale, for Opendoor being the middleman in the transaction, mean that Opendoor can pay higher, referral fees, and still end up more profitable in a transaction using less of their leverage and debt, in their balance sheet, and still grow their third-party marketplace profitably. And so I'd be pretty disappointed if there wasn't a long-term plan for Opendoor to include the third-party marketplace, because truthfully, it's a better customer experience too, right? Like right now, you look at Opendoor's offers on homes and they're having to offer, 10% less than maybe what this estimate says, because there's so much volatility, which we'll talk about in a little bit. And so they need to make sure that they're buying these homes at good spreads. But in a situation where Opendoor is the middleman, they can connect and just take their normal fee. And so there's a lot more options for the customer. It's just as fast. And ideally, the customer is actually able to pocket a little bit more cash in that situation. More options is always good for the customer, right? And that's what I think we should be fighting for in residential real estate. Being able to integrate the third-party marketplace in the Zillow deal must be like the long-term goal of this product.
Yeah, I would definitely not rule it out, especially if you look at markets, rural markets where there's just not that many cash offers, etc. Or where even Opendoor can't make a confident offer. We heard about this before, like how can Opendoor go truly nationwide in every single community, not just the big markets that they're in right now. The third-party marketplace is the way to go. And if they have the demand and the supply, then I don't see why Zillow would say no to this additional way of monetizing traffic, right?
Right.
Talking about 3 years down the line, it's probably not something that will happen this year or next year. But if Opendoor gets traction with their third-party marketplace, it would be smart for Zillow to go in under this well to not lose relevancy.
Agreed.
That's far in the future where we talk about Zillow lose relevancy to Opendoor, if ever, right? All right. This was a very exciting topic, positive topic. Let's go to something that is a bit more anxiety producing. We saw 30-year mortgage rates reach a new high today for this year to 6.75%. This is from just 2 weeks ago where we were at 5.99%. This is a major jump after the CPI print this week and could be devastating to demand. Nobody really knows. There's a lot of seasonality in this as well, but like, what could this mean for Opendoor sales or their acquisition pace going forward?
Yeah. So I have to be honest. I know that high mortgage rates doesn't sound like a good thing, but I almost welcome it in this situation. We talked a little bit about this before we started the show, but what we've seen in the data is that Opendoor is nearing record highs for sales volume, or they're heading into record volumes for sales. And at the same time, they're also making record lows for home acquisitions, right? So there's this massive disparity between how many homes are selling and how many homes are buying. And, I'll tell you this, Opendoor is currently today peak volumes for their pending pipeline of home sales. And I've checked the past few days and it continues to rise. So, mortgage rates are higher today. It's the highest it's been in 2023, point taken. As of yet, I haven't seen that affect the pending pipeline. That's one point. But the reason that I say that I'm a little bit more optimistic or welcoming of this is the fact that Opendoor's purchase volumes are so low, they're not currently sitting on any recently held inventory. the minimal number of homes that they've recently bought are being sold off very quickly. And so they're still working on selling through some of that old inventory, which they're never going to profit on anyways, and they've already written down. And so there are a few takeaways from this. One, perhaps Opendoor is or was waiting to acquire homes because of all of this expected volatility in early 2023. And it might create an opportunity where Opendoor can begin acquiring homes at lower prices that are not artificially low. They actually are low, and according to value because of these, recent increases in mortgage rates. That wouldn't be the worst thing, especially with, probably 4 to 5 more months this year of an expected seasonal HPA boost, before we head into the winter months. And Opendoor needs to acquire homes basically over the next 4 to 6 weeks. Otherwise, volumes are going to suffer significantly in Q3 and Q4.
Yeah. What worries me here is really the speed again of this climbing. Uh, it started like end of last week. We probably won't see pending, nothing reflecting pending data for another 2 or 3 weeks. We can't even really see in the demand data yet. That like nobody knows how the next 4 weeks in housing will look like. We could get to a total stop like we did last October or June, right? It's a similar spike, not as crazy as in June because that was totally surprising, but definitely in October. It's really hard to tell where things are going yet. So unfortunately, again, I'm very excited in real estate. Everybody thought like, oh, we can breathe. Mortgage rates are going down below 6%. We reach 5.5. It will be a really good year. And then with that CPI print, we just got a real punch in the stomach again. So I think what it says is really, real credit to Opendoor for being patient, right? Being risk off. This is really what it means to be risk off, even if they saw the first few signs. I mean, we don't have the purchase data yet for what happened in the last 3 weeks, but likely they didn't go crazy. They didn't just drop their spreads based on what the early listings that we are seeing from January. They didn't just drop their spreads and try to acquire as much as they can. They went
Right.
slow.
Yeah.
Because
Spreads
otherwise this could have been deadly again, like last
yeah.
year.
Yeah. Spreads are either at the level or higher month on month, every month over the past, 6 months. I would say if that's what Opendoor is doing, then bravo to them. I think there's a part of me that's like, Opendoor doesn't have a great track record of predicting macro, especially as it pertains to mortgage rates. And this seems like a particularly difficult thing to forecast, but either way, being risk off is working in their favor in the situation. And I hope as someone who plans to buy a home in the next 4 to 5 months that mortgage rates come back down so that there's more affordability. But like I said, the data so far are not showing any deviation, really just continuation of a trend. But we're gonna keep on track and keep watching it in case it changes.
I'm looking forward to your documentary about how you buy a home with Opendoor in the
Yeah,
next few months.
I'm
Looking
I'm
forward to
hoping
that.
to be I'm hoping to be sponsored by Opendoor, and so that they waive the 5% fee. It's going to be my first influencer gig, so I'm pretty excited about applying for it. We'll see.
Yeah, talking about influencers, that's a great segue, right? We've seen Opendoor really ramp up their marketing. One
What
of
a
those
segue.
areas is Instagram influencers. They started doing a lot of ads with influencers, paid marketing
Mhm.
on Instagram with influencers. We saw a little bit of that on TikTok last year, which was kind of weird. Probably some experimenting. We see some more on Instagram right now. We also saw a new nationwide TV campaign, which, in my opinion, is very excellent. They're really focusing on those unexpected events that might consider where someone might consider taking a cash offer from a seller, and really doubling down on that. Great execution, in my opinion. People are already seeing this on TV. And the last one that was, there's actually two. Let's start with uh, the basketball ad. I'm not a basketball guy. I'm not a football guy either, so I have no idea what's happening here. But like, from my understanding, last week there was drafting for basketball players, and the team that Opendoor is sponsoring got a really important player, and I forgot his name. Do you know his name?
Allen Iverson. Wait, are you talking about the Allen Iverson reference with moving versus practice? Or are you talking about are you talking about Kyrie Irving was traded?
Yes,
Yeah.
they won the player to go to the Suns, right?
Mhm.
So that was a big win. They started sponsoring the Suns, and now the Suns got an important player, which will get more eyeballs, which probably is a good deal for their sponsorship they got, which is really great. The other one is, the ad that they released the day after, which was really great timing, where they made a basketball reference that you just mentioned. Maybe
Yeah.
talk us through that. You seem to know more about basketball than me.
I mean, it was an interesting commercial. And I think you're right. I think Kyrie Irving to the Suns will bring more eyeballs because he's a superstar player. He's also very controversial. Like he believes the earth is flat, for example.
Oh, this guy. Oh no.
Yeah. He starts
Oh,
he says fun stuff. Um, but I mean, either way, it draws more attention. I don't care about the Suns basketball team, but more attention on kind of the sponsors, and the game means more eyeballs to Opendoor, and that's probably good.
yeah. And after the draft, they had this really great uh, 15 seconds ad referencing like a basketball interview from the past that everybody knows other than me, who has no idea about basketball, where they talk about all those players that got traded need to move now. And where would they go? Who helps them move? It's Opendoor.
Yeah,
Um, it went a little bit viral, not totally viral, but reasonably viral for Opendoor. It's a really good start and
yeah,
really timely production, right? Like it really hit a nerve there. I really like that. And the last one, the Super Bowl ad,
my favorite.
your favorite. So talk us through that. What did Opendoor do with their Super Bowl ads?
Yeah, so Opendoor made a billboard, which sounds like the most pedestrian, unimaginative marketing campaign. They put the billboard in, near the stadium in Arizona for the Super Bowl. And what they did with the billboard was really interesting. They converted the entire billboard into um, like a for sale sign or sold by sign that you might see in someone's yard. So they just blew that up and made it this massive sign that said "Open Door, real estate's biggest game changer." And so, when you look at it, I don't think it's ever been done before, anything like that. But it also just gets people talking. It's you know, it's a clever ad, and they probably didn't have to spend too much money on it. Certainly not the, I don't know, $10 million it costs for a 30-second commercial on Super Bowl broadcast. So I was happy to see that clever use of marketing funds.
And I think it was placed on the highway that you need to take to get from the airport on that day to the actual stadium, which is, yeah, it's a great idea. I love scrappy ads, and we should see more of that, hopefully.
Yeah.
There's a really interesting podcast that I recommend with the new VP of marketing that joined a year ago, I think, and that he did a lot of, or his team did a lot of planning of those new ads. And I hope we will see more of that now that it actually makes sense for Opener to do ads again, because they hopefully will acquire more homes. All right, last topic. Next week, Thursday, it's finally time for Opendoor's earnings call on February 23rd. First to mention is we will do Twitter Spaces live AMA again after the earnings. We don't know the specific date or time yet. Make sure to follow us on Twitter to not miss that. It's always a great time to talk to everybody and chat for the earnings. And second, you, Tyler, wrote a really great article with our finalized Q4 estimates as well as a Q1 sneak peek on Data.io that everybody should read. Tell us what you expect from next week's earnings call.
Yeah, so I had 4 big expectations for Opendoor's earnings call. I published this yesterday or this morning, and wrote it the day before. But number 1 was the Zillow Opendoor integration. So I was expecting to get some news in the Opendoor Zillow integration. As fate would have it, Zillow reported earnings today, and they talked about the Zillow Opendoor integration. But I still think hearing Opendoor's perspective on it, how it's going, what the cadence of new market launches is going to look like, and ideally what the unit economics are for that type of partnership. Single most important question there, which if you're an analyst and you're listening to this, please ask if there's ever going to be a third-party integration with this partnership, because that is a critical element, and it might be how now President Eric Wu plans to get to the almost impossible seeming 30% of total transactions for the third-party marketplace, because that could do it. Number 2, the pace of third-party marketplace scaling. Still think that this is the most important product line for Opendoor right now because of the unit economics. Third-party marketplace is only active in Texas right now and not even in all of Opendoor's Texas markets. And so hearing them comment on what the pace of that scale is going to be, and how many transactions are going to funnel into that marketplace as we move forward. Again, they said 30% of transactions by the end of 2023. We're currently at less than 1%. So how are we going to make that jump within a year for a product that's never existed, that consumers don't know anything about? I'm not sure, but any insight on that I think would be really helpful. Number 3, when is Opendoor going to begin acquiring more homes? And are they going to begin acquiring more homes? Because currently they're at the lowest volume ever, which we've hammered on about for a while. I still think that for me to get more constructive on the Opendoor thesis as we move farther into 2023, Opendoor has to acquire more homes. Because if they don't, they can't pay fixed costs and they can't sell homes, right? And so they're at the point now where they have fewer homes listed than they're going to sell in the quarter. And so I think that's an important thing to internalize. And I'm talking about Q1, right? It's an important thing to internalize because the number of homes listed is a forward indicator for sales, right? And so if they have fewer homes listed right now than homes that they're going to sell in the quarter, that means that sales are going to deteriorate from here on out, at least until they acquire more homes. And so this is the critical piece of Opendoor's business model for their first party business. And then last but not least, we talked about doing some detective work in our Discord about the Tax Proper acquisition, which is a YC company that we thought Opendoor acquired recently because it helps with the collection of property taxes and homeowner fees. And there was a job listing about it. Opendoor announced over the past week that they did in fact acquire it. And so it'd be great to hear how they plan to integrate that product suite, particularly in their enterprise product. And so any color, this is Sebastian's favorite thing, any color that we can get about Opendoor's enterprise product would make him very happy. And that makes me happy as his partner. So didn't mean to make that last.
Please make me happy.
And that's it.
I guess one last point. It would be great to hear about the buy with Opendoor traction. So again, Discord detective work. We saw some LinkedIn listings for where Opendoor is hiring tour assistants for buy with Opendoor. The first post was for 5 new markets. The next one was for 3 new markets. And it was mentioned that those are launching shortly. That means Opendoor is launching buy with Opendoor or BOW in 8 new markets, going to a total of 27, which is a pretty crazy investment, if you ask me, for what position they're in right now. That should mean they're doing pretty well with it, or they expect this investment to pay off. I would love for them to talk about this. They never talk about it. I think the only way, the only thing they mentioned is in their investor presentation in Q1 2022. They broke out that this is another service that they expect to attach that has like a contribution margin of like $7,500, which is like 2% of the home prices back then when it's mature. Where are we with that? How many homes are they selling? I think they announced as well that they had like a $1 billion GMV run rate Q2 last year. Are we at 2 billion right now? Can we break this out in the financials? Same with Opendoor Enterprise. Some more breaking out on how other business lines are doing. If they're ready for that, would be really great. That would give us a lot more insight on how Opendoor is doing with things that are not first party sales. Since we cannot observe those, there's not much we can track with the other services. So we rely on data from Opendoor.
Yeah, I think we should do a podcast about Buy with Opendoor in the future. Yeah, maybe not during earnings, but after that, I think just the economics of that is something that are really important to spell out.
Yeah, power buyers. We should definitely do that, and maybe even get Mike Del Crete on the podcast, who invented the term power buyer. He seems to be very knowledgeable about that. Let's see. All right. If you want to know what we think Q4 will look like, you need to make sure to go to datador.io right now and read the newest articles. It's Adam's subscriber article, but it's really worth it. We're doing this now for the first complete year professionally, right?
Yep.
How correct?
I think we are within 5% for all of the core KPIs that we estimate for the entire year. So our estimates have come in within 5% of actual the entire year. And then, the other thing that I think is really fascinating is Opendoor always gives guidance during their earnings call. And usually at the time that Opendoor gives guidance for the next quarter, we've already had estimates for that quarter for about 2 to 4 weeks. And I think what's most interesting about that is our estimates 2 to 4 weeks before the earnings call are more accurate than, or have been more accurate than Opendoor's own guidance, which is kind of doesn't make a lot of sense, right? But most of the time when Opendoor provides guidance for the quarter, Sebastian and I look at each other like, not even close. It's not even close to what they're actually going to do based on the data that we see. So I think, real estate data are public if you know where to look, and you obsess a little bit over it. And we've done that. And so I think we've created a model with everyone's support, and it's a small community, but it's a strong one. And I think we've really created a product that people love, and we're committed to continue improving it and strengthening it.
Yes. So make sure to join us in the Discord, join the community. We have over 700 people, I think, on the Discord now, which is really cool. And they're doing a lot of detective work. It's all coming from the community, which is really cool. Make sure to subscribe and like this video so we can continue doing these interviews. And sorry, we're not doing any interviews yet. We continue doing this podcast and hopefully get some interviews. And I think that's it for this week. We're gonna see you next week in a live Twitter Spaces, and then probably do another podcast the week after, summarizing earnings. All right,
Perfect.
see you next week.